Hi everybody, Stuart here again from Hot Forex. It's a lovely sunny day here in Cyprus. I hope everybody's well wherever you are in the world. Good morning, good afternoon, good evening, and Eid Mubarak to those of you celebrating your holiday today. Today it's all about intraday strategies. Basically, it's my 1 hour and 4 hour system strategy that works on moving averages, the exponential moving averages. Thank you, Mohammed. So any questions about it? It's very, very straightforward. Hopefully you'll get to grips with it. How you apply it is up to you. I'm sure many people the same thing many times, and different people not interpret the different things, but they apply it differently. So, Taki, all these webinars are posted on our webinar page, on our analysis page. So I've got to hotforex.com, find the analysis page, and all the webinars are there. You will get a recording of this sent to you as well, so don't worry about that. So obviously any questions, please stick them in the question box. Oh, come along, Mr. Screen. There we go. Whoops, most important bit I missed out there. So obviously trading Forex CFDs is a high risk activity, and you really need to read that disclaimer and understand what you're doing. Okay, so this is me. Those of you that don't know me, I can't see who's in today for some reason. I've lost the attendees list. But anyway, if you've not heard me talk before, I can talk a bit quickly. So if you want me to slow down, please stick that in the question box as well. But basically, my background is in the City of London. I've worked for an investment bank and retail bank. I've been trading my own money for over 20 years. I have 4 key mantras that drive my trading. It's probability, simplicity, multiple time frames, but most importantly is that 4th one there, know yourself. And I can talk for hours and hours about this, and there's a webinar called the Mind Games webinar that goes into a great detail on it. Today it's actually about applying a strategy. Anybody can learn a strategy, anybody can understand about candlesticks, anybody can understand about moving averages, oscillators, whatever it is, but actually knowing yourself is absolutely key. Accepting losing, you lose a lot in this business, and understanding winning isn't everything. Look after what you've invested. It's really a psychological business, and 80-90% of this success in this business is a mind game, really is a psychological activity trading. But today we're going to look at this crossing EMA strategy. EMA stands for exponential moving average. I like moving averages. I've always traded with them. There's lots of criticism about them, that they're lagging and they're slow and they're old-fashioned, but they keep you on the right side of a trend, and I'm a trend trader, and I just like, when trends run, they can run for a very long time, just like we've had with this short position on gold that's been running from June. A big trigger on June the 15th, and it's just ran and came to an end last night. So today we're looking at intraday stuff, so just on the 1 hour time frame, smaller targets, smaller stop losses. 4 hour time frame, obviously bigger targets, bigger stop losses, but the principle is exactly the same. This strategy works quite well on the daily time frame as well. So anything below the 1 hour, it's okay, but the targets are a bit light, so perhaps different approaches may be needed. But this is 1 hour, and it fits in with most people's time frames, because trading full time is very difficult mentally. Okay, if you're trading a system, trying to sit in front of a screen all day, or try and trade on the intraday, just trade in a few hours if you haven't got a right strategy on the 5-minute charts and all that sort of thing. But here, the 1 hour, you'd only need to check it a few hours of the day, or every hour of the day, depending on how you want to approach it. The 4 hour system, well, there's only 6 4 hour periods in 24 hours, isn't there? So that only gives you 6 times you have to look at your screen, and one of those times you're probably asleep, so that's 5 times. So it's that sort of approach. You've got to fit your trading around your personality and around your lifestyle. Don't try and do it the other way around. Okay, so today it's all about finding entries, triggers, all about the trend, as I say all the time, setting targets, setting stop loss. One approach to getting in, 2 different approaches to getting out. Okay, we'll go through both of those as well. So risk management is all we talk about as well. I talk about, but you know, any trader. I'll run through this slide quite quickly. I won't spend much time on it, but really, any trader needs to have an approach. You need to have a system. You need to have discipline. You need to have patience. You need to protect your capital. Understand the basics. If you don't understand what the spread is, or you don't understand how margin works or leverage works, or what a lot size means, they're the main reasons people lose money in this business and they give up too early, because they didn't put the effort in at the beginning when they started. They were too busy to deposit their money and then get trading straight away. You've got to do some background, because the market will take your money off you. It is ruthless. It goes up, it goes down, it goes sideways, and it will take your money off you in a blink of an eye. So you owe it to yourself and your money and your investment. We're all grown up here. You know, money is, you know, it's a motivator. It's also just a simple energy that allows you to do other things, frees up time. So you've got to understand yourself. You've got to appreciate that side of things. And there's two books I always recommend: The Reminiscence of a Stock Operator and Trading in the Zone by Mark Douglas, and I'll come to those at the end of the webinar if you haven't heard me talk about them before. But anyway, these are some basic principles. So understand all those very, very basic stuff before you start risking a single cent of your money. Let me just so this strategy works firstly on the I call it the crossing EMA. It works on a 4 hour and the 1 hour and the 4 hour system. The key things that are on the chart, which we'll come on to in a minute, is the exponential moving average, and I'll show you how to set those up when we bring the charts up as well. So the 9, the 5 and the 200 are on the chart. The Bollinger Bands are set a default setting at 20 and 2.5. I also have the RSI, which doesn't really, it's just a background information, you don't really need that. The ATR is critical. So the key things are these moving averages, the Bollinger Bands and the ATR. The rest of it is you can have or not have on your chart. It's up to you. But this is how I have it set up. And the entry rules for taking a trade are basically two key things need to happen. The 5 and the 9 EMA, exponential moving averages, need to cross. It depends which way they cross, depends which way you go. So if the 5 crosses from below the 9 and goes up through it, it's a long potential long position. If it comes from above and goes underneath it, it's a short position. That's rule 1. Rule 2 is if that has happened, this happens. Rule 2, we break the midpoint of the Bollinger Band. So those two things have to happen. So at this point, after 2, we've had 3 key moving averages that have triggered: the 5, the 9 and the 20. So we're with the potential energy of the market, and that's what my trading approach has been about for years and years and years. So we enter at the close of the candle when these two things have happened. Okay, the target, the initial target, the first approach is to just use whatever the ATR was, and we'll see that on a target as well in a minute, at the time of this thing happening. Might sound complicated. It'll be easier when we actually see the charts, hopefully. Well, it will be. So that's the target. The stop loss, typically on the first setup, has to be below the turn in the market, where the market turned before these first two things happened. Okay. It sounds a bit dry me talking. I should have perhaps put a chart up first, but anyway, the stop loss needs to be where the stop loss is, and then off we go and we're off and running. And I say the target is 100% of the ATR. And there is a twist on this, or a part 2 for I said there was one entry, so the entries are always the same. This has got to happen. And but the second target, or the target, if you think this run is going to run, is for when the price then crosses back across this one, the 9 EMA. But again, it's very difficult to talk about. We'll show you, or I'll show you on the charts in a minute. Okay, so that's the basic setup. It's a moving average crossing trending strategy. Okay, end of story. You can. Robert's just asked, can you set the stop loss below the 9 EMA? Of course you can. It just gets closer to where you get in if we're trending. We'll see where that is. Sometimes you set the stop loss at the 20 period moving average as well, and we'll see that on some charts. And this dollar move we've had in the last few days has been a really good example of that, and we'll set that as well. But they're my rules. Okay. The initial system, the stop loss was a long way away because of the turn, but If you want to have it closer, that's your decision. But the standard system is down, all the way down here, so it's quite a big. The issue with it is that the risk-reward ratio is quite low. This is the downsides of this approach. The risk-reward ratio can be quite low, and if you do get your stop loss, it can be quite a big one. So you need a fair amount of margin in the account if you're going to have the stop loss all the way down in the turn in the market. But let me just bring up a chart to actually show that. It's probably easier than talking about it. Here we go. Hopefully you can see all that. So this is just a typical setup. I call it the 1-2 rules happening, and the 4 and the 5 is the target and the stop loss. So here, this is the 1 hour system. 1 hour. So here we've got this. Here we've got on this chart, we've got the green lines, which are the Bollinger Band. So we've got the upper Bollinger Band, the lower Bollinger Band, and the mid line of the Bollinger Band. This third green line here. The arrowheads are the fractals. Don't worry about that too much at the moment. Obviously, red candle means down, green candle means it started there and finished there. So red candles are negative, green candles are positive. But here you can see from left to right we've been going down. And what happened? Well, we went down and down. So the 5 here is the blue line. The red line is the 9-period EMA. So here the 5 crosses the 9 from below, so we went long. So here the blue line has crossed through the red line, and that's a potential long signal. In this particular candle, it happened at the same time, because the second rule was to break the midpoint of the Bollinger Band, and those both happened in the same candle. That doesn't happen all the time, but it did in this case. So the entry was there at 1:22:05. When that happened, the close of that candle at that hour there happened to be 9 o'clock on whatever this was, January, March, I can't remember. So the ATR was 10 pips. So we got in at 22:05. The target was 22:13. It can't have been 8 pips. No, it must have been 8 pips. Yeah, there we go, 8 pips. So the stop loss in this case, the rule says, is below the turn, and the turn was here, as you can see, for 1, 2, 3, 4 hours. We didn't close below this 1:21:88. Now then, part of the criticism of this approach is that this bit, the stop loss here, is much bigger than the target, and I accept that. Okay, that's so the risk is that do this a few times, you end up emptying your account. The positive side of it, and why this works, is the fact that when you trigger, you've already above the 5, the 9, and the 20, so you have maths on your side and you have probability on your side. The other thing in this particular example, it isn't part of what we use here from the rules point of view, but this candle is huge. Look how big this candle is at the London, not necessarily London open, but early London time. It's consumed all these previous small candles. So this one candle here by 9 o'clock had taken us all the way back to where we were at 10 o'clock or 8 o'clock the previous night. So all that down action, little smaller candles, very small, bit bigger, small, had all been consumed or engulfed, as we say in stick speak, by this one candle here. So that was fairly comfortable that was going to run off to target. So that's a long trade with this EMA approach. Okay, next slide is just simply the other way around. It's a short trade position, and this one was one that I took, although it triggered earlier. So here again, this is different colours, but it's the colours are the ones. This is obviously just a black background, white background, so the colours are a wee bit different. So here we've got the blue, the 5 crossing the 9 from above this time, so it's short. So here it's crossed here at that point, whenever that was, middle of the night, but it didn't cross the green line, did it? There was no indicator. We didn't close below the green line till about here. Then actually it did the next hour. It closed there. See how that white candle's closed there below the candle. Next one pounced up, but that would have been the entry. But I wasn't around then to take that. I saw that here at again sort of 10 o'clock. Big energy down again. So it was good enough to enter at that point. So we entered at number 3 here. And the target was at $2. I think this is gold, isn't it? This one, yeah, gold here. XAU USD. That's a gold trade on the 1 hour. So it was about $2, $32.30, and it went down to $13.30. So a little over $2 in that move. And that was what the ATR was, number 4 here, 2.25. And and that's 200 odd pips on when we're trading gold that we're in. And again, the stop loss on this one was back up here. Now then, if you want to, because that's where the market really turned. Yes, it spiked all the way up here, but the real turn was sort of up here. You can, if you want, bring the stop loss to the 20-period moving average, which is what Robert was asking before. So it's up to you, because obviously that uses less margin, and when you've got the trend running, it runs. So they're two examples, one short, one long, but the theory is exactly the same, and this works on 4 hour and 1 hour time frames fairly well, and I quite like this approach. Okay, that's just this is a live one we did last time I was in Lagos back in March. We'd been talking all day, having some training, and this I suddenly brought this up at 6 o'clock as we were finishing, and it triggered there. See how the yellow here has gone over the blue, it's over the green, so that was an entry, target was there, and it's ran off, and so we got a few pips on that one. But if we'd followed the other theory, which we're going to talk about in a minute, you know, they would have run all the way up to there and would have stopped out when it crossed up there. So instead of just that little bit on this one, because we would have let it run until the next candle then closed below the 9 period EMA. But I'll come on to that and explain that a wee bit more in a minute. Yeah, ATR, good question. Sorry, I'm assuming everybody understands what I'm talking about. I'll come on to that in a minute. ATR stands for the average true range. Again, you can watch whole webinars on the average true range, but in simple terms, let me just go back to a chart. This thing here, the ATR, the average true range, 14. So for the last 14 periods, it's how far the price has travelled divided by 14, giving you the average. So here at this, so that's why it's a line plotted on the graph that goes up and down. So as the distance travelled in each hour gets bigger or smaller, obviously the line moves, the amount of pips moves. So in the last, so here when we entered on this particular example, it was about 11 pips, because if we count back 14 periods, the distance between the top of the wick and the bottom of the wick of the candle, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, back to here, our average, the ATR is telling us it's about 10 pips. The next hour it was still 10 pips. Next hour it's moved a bit more because it's dropped off. It's added that one but dropped off the you know, number one and the previous hour. Obviously here, because we've got this huge one here, by the time we get to the close of that hour, the ATR has jumped up, because we've got our 14th period we were counting as much bigger than anything else has happened. So therefore the ATR has increased, and the likelihood of more momentum has increased as well, because we've had a big candle from before. So it's all about what's happened before. That's what ATR means. Okay, I hope that makes sense. Is everybody still with me? Does that make sense? It's as simple as I can make it, to be honest. So this is how I have my chart set up. Okay, for this particular system. As I say, the most important ones are the trending and the key ATR oscillator. Okay, so the trend, remember, it's a trend following system, not trend predicting or a trend. It's trend following, basically. So to set it up on your MT4 platform, you'd set up a new chart, and then you'd insert these indicators, and these are just simply the colors I have. So we have four trending things that are on there, and the first three are the moving averages, the EMA, and we'll go through this with a platform as well in a minute. And these are just the colors I have them set up at. Within the trend, I like, oscillators, they're momentum indicators. So we also have the RSI, which I don't really use, to be honest, but it just keeps it me an eye. I like it on all the charts I use, so that's my favorite oscillator. But as far as as I've just said, for setting targets, it's the ATR, and this is the average true range, again defaulted to set at 14. Fractals are those little arrows we saw on the chart. That's, you click on that's Bill Williams on the chart, and then to insert the pivot points, you need to go to Navigator, and you'll find a Hot Forex pivot, and that's available for the latest version of MT4. If you've got, you need to upgrade it, but I think it comes with the professional traders package, which needs, I think you have to have a minimum deposit of $200 in there, but you shouldn't be trading if you haven't got less than $200 in my opinion. But anyway, that's a story for another day. And that pivot point, this Hot Forex pivot, gives you the resistance and support levels. So the red ones are the resistance levels, daily ones, you can change it obviously, and green is the support, and the orange is the key pivot, the daily pivot point where the price may or may not, or should pivot around based on price action in the previous session. Okay, So this is what it'll look like when you're doing it. So these are the things, and what we'll do now, actually, let's actually bring in the charts. Does everybody want me to see this setup? I'm assuming people do. Or are you sophisticated enough that you just want to have a look at some charts? So this is what's this? This is gold on a 1 hour chart. So hopefully everybody can see that. Now let's zoom in a bit. So what we've got here again then. So the green lines here are the Bollinger Bands. The blue line is the EMA 5. You can see that's popped up there. So that's a blue line. And the yellow line is a 9-period EMA. So here we've had a bit of a trigger here. We've been trending up, nice gap between the moving averages. The 20's moving up, 9 and 5. So we have a nice little trend there, up, up, up. So that would have been triggered. So the original trigger was here, wasn't it? You see how that's triggered there? The ATR, let's just do that then. So here would have been a first trigger here. The blue has crossed above the yellow, and we happen to be also above the midpoint of the Bollinger Band at this time. Okay, so that would have been an entry there at whatever time that was. This is 7 o'clock on the 20th at 186. It's a bit high, so let's say 1186.74. So what was the ATR at the time? Well, you go down. This is the ATR set here on our chart. The ATR is about $2 here. See the value there? $2. So $2 from there, or 1186. So that should take us to 1188.74. So we'd put our target in wherever that was, 1188. What did I say it was? 74, 1188, 74. Let's just change the object list. Let's change the color of that. Mohammed, we'll do. I'll do it for you in a minute. Okay. Well, let me just go through this, and I'll show you how to do it. Okay. Don't worry about that. So let's just change that to blue for target. So that was our target there. 188. Oh, actually, it's not right, is it? Close. Anyway, you get my drift. Hopefully, if I zoom in a bit, I won't go through all of that, but. So that was, where were we? We were here, so we'd dipped down, but we were already long here from that one. So this is where we were. So we were 88, and our target. So within an hour, we'd hit there. So then the theory says, okay, so we've got to target 1 within the first hour on this one. Let's just zoom that back up again. So we're down here. So the part 1 approach to this is, well, we could enter again on the close of that hour because everything is still as it was when we got in the hour before. Okay, so we've got another potential entry. We'll make the let's change that to a green color. So close. So what happened then? There we go. Sorry. So we got in there. It ran to our target. Got our $2, and but the trend's still running because we've got the 20 there. We got the 5 and the 9 nicely aligned. They're pointing up, nice sloping. So we could enter again. So next entry would have been there. What's the ATR now? Well, it's gone up a wee bit. So it's 2.07. So another, let's keep it simple. Another $2. 11.98. That would take us to 11.91. And 1191's around about there. So yeah, in this case, it took a while because it was overnight. Let's change the color again on that one. So this all seems too simple, doesn't it? Well, this is what happens with trends. Okay, so 2 winning trades in a row. Would we still enter again? Well, yes, on the close, but it would have spiked. Whether we actually got that target there exactly is probably, hang on, where's the green one? The green one, 98.08, so this should be 91.08. So let's just change that. So object list. And I'm only saying $2 here because that's what it's coming up to about on the ATR each time. Okay. So there. So it would have happened. We triggered here. So it would have been 1, 2, 3, 4, 5 hours later before it actually would have spiked up probably on that hour as well. So we could have entered again and kept going. If you wanted to keep through, so you can see how the trend's developing. So it's nicely still aligned. There's a nice gap between the moving average. So the trend is still with us. If you were wanting to trade it the second approach, we can oh, sorry, I've lost your questions now. We can just the other theory is, so we'd entered, let's say we'd entered this back here down at this yellow line again. The other part of the theory is, our second approach, is to just leave the trade open and keep, you can either add to your position, your lot size as it's comfortably going up instead of closing it, or and then get out. The theory says, or my theory says, is you then get out when when the candle closes below the middle moving average that you're dealing with, and that's the 9. So a close below the 9 would take us out. So here on this nice trend we've demonstrated, we would have got in down here at 1186.74, and we'd have closed it out. Let's just bring that up. That doesn't want to do that. Let's just do that. Would have been here at whatever time it was, 1 o'clock the following day, here at 1193. So we'd have got all of that move there. So we'd have stayed in it until it closed below the yellow line. Okay. Because the issue of adding to your position as you're going up and going up is you still would have, so you might have missed out, you might have got stopped out on that one. And if you're going to use that one, what I said before is, instead of the stop loss being down here around the bottom of the turn, obviously it wouldn't be on this one because we've just got on this, it would be further down probably, because where are we? We're here, it would have been perhaps further down. Your stop loss could have been the midpoint of the Bollinger Band, the 20 period moving average. This is your stop loss as we're moving up. So it's just a different strategy. We'll have a look at that when we approach it. So right, sorry, I've probably confused a lot of you. Let's bring up. I didn't mean to do that, did I? Let's bring up the. Dear. Actually, let's just minimize that. Let's bring up the chart and let's just see how we'd set. So this is a typical 1 hour setup, 1 hour charts I would monitor on a daily basis. So let's have a look at some of these questions. Let's find the EMAs and let's set up a chart from blank. Hopefully it'll clear up a lot of with trailing stop loss. Absolutely, Matthias, you can do it with the trailing stop loss or the 20 period. Yeah, it's simply. It looks great, Matthias, when there's a strong trend. The problem with moving averages is obviously when there isn't a trend. So let's just use this as an example. So moving averages are great. Zoom in. Are great when we got this move, but and this is a bad example as well because it has trended. But as you can see here, when it's going sideways, it can get zigged in and zigged out. But here, for instance, here on the euro, it triggered properly back here, and it's been over the 20 period all this time, and it's been positive. So you could have trailed that up, and it didn't close under the 20 period till here. So again, with this second approach, Matthias, you'd have got in here, and you'd have got out here when it closed under the yellow line, the mid line, the 9 period EMA, but also closed under the 20 period. So that would have been, I would have got, probably if I'd been following this, I would have, it's easy to say this now, isn't it? But that was just the one, it was overnight, it was the middle of the afternoon, sorry, it was the middle of the afternoon, so it was a key area, but by 5 o'clock, as the London session was coming to an end, it had gone positive again. We were back over the 20 period, we were back over the moving averages had started to cross, and that would have been heads up. Would I have got back in? Well, perhaps not, because I'd taken all that pips. I would have waited a wee bit, and I would have entered there. That's the big one, and then I would perhaps, it could have even entered again there, because it might have taken out, or entered there and left it, or perhaps added to it there, and we came back. We didn't close back down under the yellow until this morning here at 10 o'clock, and then again it's done exactly the same thing. It's dipped down, but there's inherent strength in this because we've dipped down under, and then we've gone back over. Another suggestion, we might go long here at 11 o'clock, certainly 12 o'clock, and we're off and running again. And as you can see, right up to date now, nicely aligned. We've got the 20, the 9 and the 5 all nicely aligned in order, and that's how this should be. Okay, so, and that's off and running now. Okay, just looking at this pure price action. And again, those of you who attend my other sessions at the live analysis, you know from everything I say that my approach is I'm a big fan of the 20 period moving average, and here you can see the 20 period moving average, if you were trading at a higher time frame, has kept you the right side of this trend. You know, that close below there isn't strong enough to stop me out if you were on these higher time frames, because it's just smidged under it. So that's, you're still in this trend from all the way back here, as far as the 20 period, the 20 moving average is concerned. So that's an established trend, clear on this 1 hour, and if you go up to the 4 hour, which we will in a minute, you can see how it goes. So I hope that makes sense. But for all of you that are new, let's just let's do this from first principles. So new chart. Let's pick the first one. So it comes up with dollar Swiss. So we want to set it up. So let's just insert stuff. So what we're going to do, let's get rid of the grid first. So we want to change the again, you can leave it like this is the default, but so what we would do, you would change the properties, you'd change the instead of a bar graph, we want a candlestick. So click on there. Oops, let's close that. Let's change it to candlestick to start off with. There we go. You can't see that now, so we zoom in. So they're white and black to start off with. We've got this black background, so we want to change our candlesticks. So we don't want volumes. We want where we go. Down candle is red. So red's here. So we change that to red. A bull candle is white on our time frame here. Bear candle is also red. Red. Bull candle white. Bear. What have I got? Where are we? Bar up, bar down is red, bull candle, bear candle, bar down, bar up, that's that one. Right, okay, so there we go, we've got our candle set now. So we now do, again, this is just my settings, you don't have to have these colours at all, obviously. So insert indicators. Remember, it's trend, so we're a trend following. So the first one up there we can see is the Bollinger Band. So we have our Bollinger Band set at 20, and the default mine is set at 2.5, so it doesn't really matter. You leave it at 2 or 2.5, it doesn't matter. That colour is defaults to medium, is the colour I use in medium sea green, but again, use any colour you want to. So that creates our Bollinger Bands. Now then, where it's a trend following, so we insert indicators, and we're looking for trends, and we want our moving averages now. So our moving average, remember the 3 moving averages we put in there. So moving average, let's start with the 5, and the 5 is the blue colour, which is about it's that one, isn't it? Cornflower blue. So that's our 5 moving average. But did we put exponential? Let's just check. I don't know if we did. So indicator list. Again, there's lots of ways of doing this with MT4. So check the indicator list, moving average. I didn't check it. It's actually default to exponential on this one. So we do. So make sure it's not simple. We want exponential. So that's our 9. That's our lowest, fastest moving moving average. Next one is our yellow 9 period. So again, we do insert indicators, trend. We're looking for moving average. There we are. Moving average, and this time we want 9, and it's yellow exponential on the close. Thanks very much. Off we go. So there we go. We got our crosses on here, we can see. So what else? Well, we now need the ATR to give us our oscillator, but the final moving average I put on here, which we don't use very often, but it's quite powerful when it does do. Patricia, the difference between EMA and SMA, or the moving average, is simply the way the maths works. The exponential moving average weights the final, puts more weight on the final few candles. A simple moving average, so a 20 period simple moving average, simply weights each of the 20 periods equally and divides it by 20 to give you the number. The exponential one weights the latest time frame, the last few time candles, as more significant. That's the only difference. There's a few other moving averages, but these are the 2 most popular ones and the ones that are most moved. So on the lower time frames, these 1 and 4 hour time frames, I use the AMAs. Up on the daily time frames, I'm usually quite happy with a simple moving averages. Okay, so where do we get to? So we got our Bollinger Bands, the green lines. We've got our 5 and our 9 EMA. We need our big high period 200 period EMA. So file, what we do? No, we don't. We're doing insert, indicators, trend. We want moving average. And this time we want a golden 200. So this is the last 200 hours. What the trend is telling us. Okay, so we've clearly broke, here we are, the gold line here, we clearly broke through, so that's much, the higher the moving average number, the more significant it is. Okay, so here we're clearly short, because at this point here we're under the green, which is the 20, we're under the blue and the yellow, and now we're under the 200 as well, so it's a week old movement. So that's a big significant cross there, where the 20 crossed under the 200. As you can see, you know, the fastest crosses is first. So the blue, the 5 crosses first before the 9, and then the 20 finally crosses at this hour here. So trend is off and running. So that's our trending. So where we got, how are we going to set our targets? Well, our targets are set by this thing called the ATR, the average true range. So we need to insert that. So insert on our chart, indicators, and it's under oscillators, the average true range, and there it is, average true range, and this pops up as a little line chart below our main chart. So here, this is, again, it defaults to Dodger Blue, standard period 14. As I've explained, it counts the 14 candles to create what the average true range should be in the next going forward. So here we are, currently 9 pips on this particular cross, the dollar against the Swiss franc on this 1 hour chart. As you can see here again, very strong trend, as we've seen here back yesterday, the 20th, running down, running down, running down. You'd still be in that one. Again, moving averages are great, and they're great to demonstrate when trends are like this. But as you can see, when we're going sideways, it's no good, because you get in and out sometimes. There's no clear defined trend, and there's the gaps between the moving averages is really what you want to keep this trend going. And that's a nice steady trend, as we've got the EMAs trending down, and they're all nicely aligned, 20, 9 and 5 all in a line, and off we go and running. Okay, so who was saying, Patricia, who was saying they couldn't see the EMA? Somebody said they couldn't see the EMA. Mohammed, have you found the EMA now on your chart? So let me just do that again. So you go to insert, indicators, you want a trend, and it's moving averages. Okay, so the EMA should be here. Okay, if you're trading off your a smartphone, you haven't got all of these indicators sometimes. So make sure you've got the right platform that you're trading from. Okay. So yeah, and there's lots of other things. It's the fractals. I won't bother putting the fractals on and the other things and the pivot points. But basically, these are the key ones that we're using to trade. I say the others just give us a bit of a heads up. But installing them is exactly the same. Okay, so if you were actually let's do that as I've said before. So insert and the Bill Williams, that next one was in fractals, and it defaults these little grey arrowheads. So grey is the default number, and all that's doing is showing you turns in the market. That's what fractals do, and they're quite simple as well. So you can line up the fractal hedge. You can see that's a clear trend. And then if you've got the navigator terminal, you can see here you insert the pivot points. So here, you click on navigator, and I say if you've downloaded the professional traders tools, which is all these ones here, great package. We get these other options with you as well. So double click on pivots, and again you can change the inputs, but the daily pivots is good enough for me. You can change it to 1 hour or 4 hour if you want to, but you'd need to click allow DLL imports. But I leave these at the daily key, because the daily pivot is very significant to the 1 hour and the 4 hour chart, so I leave those on. So just click OK, and then it inserts them here. So R for resistance, R3, 2 and R1, pivot where it's pivoting around, and below where we are is S1, S2 and S3. These are the support areas, so these just gives another bit of a heads up. So that's a near standard 1 hour or 4 hour EMA. And then when you're happy with that, how do I change the color of the 9? Well, all you do to change, so you then look at the indicator list. So you right click your chart. You then look at the indicator list that you've got on, and this is what you've put on your chart. So on my main chart, I've got Bollinger Bands, moving average 1, 2, 3. I've got fractals. Blah, blah, blah. So if you want to change the colors, all you do is click on what you want to change, and then simply pick the color you want it to be. So if you don't want your 5 to be cornflower blue, and you want it, I don't know, bright green or something, or I don't know, pick a color, anybody. Let's make it, I don't know, let's make it, I'm terrible with colors. Let's make it powder blue instead of sky blue. Not that there's much of a difference. There you go. Just click it on there and apply it, and it changes it to the colour. Except it's disappeared. Has it disappeared? Was it? Oh no, there it is. I hardly see it, but there you go. So that's how to change the colours. Okay, and you can change everything to you change the thickness of the other. Sometimes the indicator list. Again, here you can change the thickness of the lines. Okay, so here on the Bollinger Bands they look a bit thick, so we can thin them out a bit if you want to, or thicken them up, depends how you want. So there I've thinned out the Bollinger Bands. I've put them on thicks because so you can see them on the screen. Okay, so MT4, the MetaTrader platform, is really powerful. It's easy to use. MT5 is available now, and there's lots of new features on there. Andrew's going to be doing a little webinar on that at the beginning of September the 5th, I think it's scheduled for, about how to get the best out of MT5 as well. But there's lots of other things that comes with MT5 as well as MT4. But MT4's been around for 10 years now. It's very stable. It's a great little product. MT5's been around for a while, and it's now nice and stable and easy to use. So anyway, that's the setup. And the only thing that's missing off this final, let's just finish it all while I'm still here jabbering on. Indicators is the RSI, and again, as I say, it's not something that's what am I talking about? RSI. Where's it gone? Relative Strength Index. There you go. And again, it defaults to 14, and mine's default to crimson. Again, if you want to change the color, change the color. Where can I find tools for measuring pips on MT4? Measuring pips. I'm not quite with you. What you mean there, Charles? Okay, so there we go. So again, this indicator's defaulted at the bottom, and it's just giving you a heads up. The theory there, RSI is overbought, oversold. Anything over 70 is in the overbought area. Anything under 30 is in the oversold area. So it's just it's just a suggestion. Look, it's at 28 at the moment. So on this time frame, this is saying that the dollar Swiss is a wee potentially oversold, but as you can see here, it was oversold for all this time, and it still kept going down, didn't it? Here, so no one indicator is the be all and end all indicator. So here, it's still short, and if we'd followed that theory, this part, part 2, doesn't look very nice, does it? Let's just try and this triggering idea from yesterday again. So the midpoint, it crossed. See how that's an interesting one as well. See here that it's under at that hour there. It's under the 20 period, but the 5 and the 9 haven't crossed yet. So the confirmation, it's when it's under that one, is there, and that's a big entry because at this point we're also under this very significant 200 period. So that's a big entry there on this this particular chart on this on us. So that was a big entry, and it also, well, I don't think it would have been. Oh, I don't like that. Let's zoom that in. Let's zoom that up a bit. Where are we? Yeah, so it was up. Oh, dearie me, excuse me. So the entry was here at that point there. So that's a big. And then again, where have we got? Then go back. So it would have been short, and out there as we've closed over the 9 period. But again, as you can see, the 20 period still kept you in. So 20 period and the still would have kept you in. So if you had your 20 period as your stop loss, you're still in this, and you're waiting for it. You're just letting it run, let it run, to keep your trade open. So it's a big move down. As you say, now it's moved so far. RSI is perhaps suggesting it's a bit overbought, but it's gone through S1, so it might stall here. They're moving out. The Bollinger Bands now are flattening out in the last the Asian session, particularly early part of it's dipped down again in the European session, so it's sort of flat here again. So it's still short. So can this method imply a high time frame of 4? Absolutely, Dado. I'm just going to show you that in a minute. Okay, so right, let's just hopefully everybody's got the gist of the this 1 hour system. Okay, you apply it to the 4 hour, you apply it to the 1 hour. So it's all about setting up. So that's the thing. Now then, when you're trading intraday, there's some things that you've got to be aware of, obviously, and that's news, key times, changes of the sessions, and so make sure you're well aware of that. So always have, when you're trading, this is just the twist I've just talked about there. So this is leaving the trade to run and using the 9 EMA as close as your target, and use the stop loss at the 20 period moving average. So we've just shown you that, so we'll go through that again in a minute. I'll come to Dado's question in a minute. Potential pips during markup. Yes, you can, if you click. I'll come on to that in a minute. Izzy, I will send you an email afterwards. Okay, I'll show you on the charts in a minute when I've finished the slides. Okay, Charles, to answer your question about pips. Oh, come along. So, as I say, on the 1 hour time frame, so this comes down now, this is the issue about time frame. So on the 1 hour time frames, you really only want to be looking at the tight spreads. So look at the majors, if you're trading 1 hour and lower. So even, as I say here, even some of them like the pound yen sometimes can have quite a biggish spread. So the spread, it's all about liquidity, it's all about volatility, and the spread can hurt you. So as I said right at the beginning, be aware of margin, be aware what it is, understand leverage, understand the spread, understand these ideas about liquidity and volatility. So, but these liquid pairs, especially during the London session, can trend very, very well. If you're going to take this up to the 4 hour and the 1 hour time and the 1 day time frame, D1, all markets are available. Obviously, your targets are higher, your stop losses are higher, but you can trade more than these sort of top 10 liquid assets. Okay, because obviously it spreads on the chart. Ryan's asked how to add the pivot points and resistance levels on the chart. It does it automatically, Rowan. Okay, you just need to, again, I'll come back to your question when I bring the charts back up. Let me just finish these slides, and I'll do that again for you if you like. So 4 hours you can trade all the markets, so all the crosses, all the dollar crosses, all the euro crosses, all the pound crosses, the commodities, gold, silver, copper, even, and the indexes as well. All works quite well on here, even Bitcoin. So intraday stuff, you've got to be aware of this stuff. So key summary is liquidity, session changeovers, and key news releases. Obviously, so have your economic calendar up. Be aware most days 3:30 server time, 12:30 GMT. The big US news comes out normally, but the deep market, the center of Forex, and there's a great article this morning on Reuters, and if you want it, email me and I'll send it to you. A great article today. Say even though Brexit is looming in the UK and there's all worry about banks shipping jobs out of London has become even more significant for Forex. It's become even more dominant than it was before the referendum vote, which is very, very interesting. As you can see that very clear from this liquidity chart here. So the London Open, and this is the busy session. So the London time frame, geographically, because where London is, between Asia, between North America, all the key news for both those areas all congeals around the London time frame, so it fits very, very nicely. So those of you that are in Europe, in parts of Africa, you're very much fit with the European time frame, and so you're very much on the London axis. Johannesburg typically an hour or two on the same time frame as London. So all you guys in South Africa, it's a really your day is the London day, so it's an easy time to trade. Obviously the Asian session, though, the liquidity drops very significantly at the end and the beginning of the sessions as well. See how it drops. So this is when you can get these crazy spikes. This is when you can get low liquidity but high volatility. So the spreads come wide. Suddenly, there's some slippage around this sort of time. And many of the spikes we've seen in the last few years has all been around this, this New York close, Tokyo open, Sydney open. It's all around this sort of time. It very rarely happens when there's lots of market participants up and trading and deals being done. So Forex is absolutely time driven. And if you're intraday, it's the London session is king. Liquidity, session changeovers, and key news releases. Have them. Be very, very aware of them. And obviously, sometimes side markets go sideways as well, not trending. So our trending tool doesn't really help you. Nedson, I don't know when I'll be next in South Africa, but hopefully soon. So here we are tomorrow. I'll bring the charts back, don't worry, we've got plenty of time. Well, we haven't actually, it's 5 to. I've got another 10-15 minutes left or so. So tomorrow, support and resistance with Otto, live analysis every Tuesday. Andrew's going to be looking at the next 4 months. September's a key month, and then the final quarter we'll look at the end of September, and then Fibonacci with Otto again on the 30th, last day of the trading month. Okay, so let's just bring the charts back up and answer some of those questions that came up after I'd taken the chart away. So let me just go back to questions. Screenshot pages 1, 2, and 3. Charles, okay, this screenshot, I'll go back. Tell me when you want to go back. Can you apply this to 4 hour? Yes. So what I was saying, Dado, it was about the 4 hour and the 1 day. Absolutely. This is what have we got up here? This is the oh dear me. Let's just get rid of. So we've set this one up. It already exists. Not the dollar Swiss ones. I'll just close that. So when you've set this up, this now becomes a template. So you can then save. Whoops, didn't mean to do that. Put a buy limit in Aussie Aussie dollar there for some reason. So let's just bring this Aussie chart up here. So you can now save this as a template. So, and the template I call it here I call it my intraday crossing moving average template. So that's how you save it. So you want to template. So you save the template, and it says give the template name. So you give it a name, and then you click it, and then you just apply that template to anything that you've created. I'm not going to do that now because it'll just overwrite it, obviously. So that's how you save the template, and then once you've done it for one chart, you then just copy it to the other chart. Okay, does that make sense? I hope that makes sense, because that's one of the beauties of MT4. It's very, very easy to play with. So this is my 1 hour setup, and I said, although I said look at the 10, I look at a few more than that. So I look at oil, as well as a couple of the euro crosses, a euro pound, euro yen, and Bitcoin as well, and obviously gold here. So that's my some charts, but they're typically, I don't look at the 1 hour system. Doesn't I don't want to be looking at many more because of this tight spread that you're looking for. Okay, so but I have the similar template, or the very same template, set up on the 4 hour system. So here I call this one the intraday H4, and it's just got lots more charts, so more of the crosses. So it's got euro, all the euro crosses, all the oops, wasn't it not? It's not responding apparently. There we go. So Bitcoin, euro, Swiss, something you wouldn't necessarily trade in the 1 hour time frame, but on the 4 hour and above and the daily, it's just as applicable. So to answer your question about the D1, Bido, so this is the euro this is the template for the 4 hour template. So if we just check it, let's take it up. Let's take all these lines off this one particular. So let's just delete everything else. So clean it off on this particular 4 hour template. It's exactly the same setup. So if we take it up to the daily time frame, we've got a similar trigger there. So there we go. So here, as far as on the daily time frame, this system is saying this has gone long this morning or last night at the close here, or euro dollar. This has gone long here at 1507, whatever that is, 1507. because again, but you know, it's taken 3 or 4 days. So lots of people say, well, that's already ran out. But you know, we'd been in a big downtrend, and it'd taken 4 days for that turn around. That's actually quite a bearish signal, that V-shaped down, but big strong not strong fall, big long wick. So the system would say we were going long now because we closed there at light. So 1570 is exactly the same principle. Your first target would be 80 pips on 80 pips. Yeah, 80 pips last night. So on this system here, so 1570, 80 pips would take us to 60, about, wouldn't it? So the first target on the up on the daily time frame would take us up to here somewhere over the R1 at about 1650, 80 odd pips on this one. It's had a good day today so far, so we're in the money. So if you've taken that last night, you're currently in the money, and our target's here. But again, our stop loss, this is a good example of one of the drawbacks of this system. The loss really should be back down here below, somewhere below these candle lows here. So big stop loss. See how big that is. The risk reward is really poor wanting that initially, but you know, because we're now above the 5 period, the 9 period, and the 20 period moving average, this, you know, I'm happy to take that, and we're already halfway to initial target. Okay, if we were trading this on the second approach, we would enter here and just let it run until it closed. The candle had closed back under this 9 period. This yellow one here, the 9 period moving average, exponential moving average. Okay. Somebody's asking about pivot points. Right, so to insert pivot points, you need to go to the navigator, but remember to have this navigator tool. So if you all these indicators available, some of you say we can't see them. It's because you won't have the professional traders tool. You need to install that to get the pivot point. Pivot points aren't absolutely critical to trade this approach. This approach is based on the key 3 moving averages crossing based on 9 and the 5. Okay, that's how you put how to use the hot forex pivot indicator. John Paul. Well, basically you just insert it. So, and I won't do it again, but basically you find it here, you double thumbs up like this, and you can and if you want to, it defaults as to the daily time frame, but if you want to change it to the 1 hour or the 4 hour or something, you have to click this box here, allow DLL imports. Okay, then it allows you to change this to a different time frame. Okay, and they, again, like with all the others, you can change the colors if you want, and what have you, but that is simply inserting it like that. And what this is telling you, this is calculated every day from the previous day's close. So these are key areas that lots of traders use, these pivot points, these resist R1s, R2s, and obviously the further medium the pivot, the average, the less likely these areas are to hit. So typically on average, percent of the time S1 and S2 get hit in any one day. R3 and S3, it's only like 3% of the time typically, if you did the maths on it, how often these areas actually get hit. But because they're so far, when they do get hit, they're quite significant. Obviously, as you can see here, this is a good example here. See, R3 is all the way up here around this key resistance. Those, you know, this is a daily time frame, 3, 4, 5, 6, you know, many days it's not closed over this level, and that's where the key resistance is. It's above that around these areas, and that's how the simple maths work. Okay. I hope that's got the issue about and Debo answered your idea about H4 and D1. Obviously, the beauty of H, the more markets are available to you, but you need, obviously, you've got bigger targets and you've got bigger stop losses. But you're trading less, so it's all a balance. It's all a balance that fits with you and your personality. If you need more action, trade the 1 hour. If you can't cope with looking every hour, or you know, every 15 minutes even, not that this works very well on 15-minute charts, but you know, trade the higher time frames. Okay. Screenshots pages 1, 2, and 3. Charles, okay, we'll do that. Okay, so any more questions about this actual approach? Because I think I've gone over minutes over time. This particular approach it's one of the most simple, straightforward ones to get you going, get you and you know, it works quite effectively as well. All the time. Obviously, we need trending markets, and as you can see here, for instance, here's a good example on the daily time frame. The euro going sideways for a long time, but when it broke out of this channel here, this sideways action, we had a big down day here on the famous 14th, 15th of June. Big down day here on the 14th, and we've gone sideways out of this channel. It was a down for a week, but we're now back into it, which is very interesting. Euro's got a bid as well. But anyway, that's a story for another day, why that's happened and what's going on there. It's about this actual strategy or this approach. No? Good. Okay, I'm not quite sure which slide you thinking about, Charles. So I'll just go back. I can't remember. My pages aren't very well named. So that's who joins. We're here to help. Okay. We want you to be successful, because if you're successful, we're successful, as I say all the time. The video will be up on in an hour or so. Yeah, when I've saved it, and the marketing guys have stuck it up there. But you will all get all of you that are here will get an email to say where it is when it's loaded. My system one can use in a volatile zigzag market. If markets are going sideways, okay, you're looking at something like the oscillator. So here you'd be looking at like a stochastic approach. So look at some of the oscillators. So the RSI doesn't really help you here, but you have a sideways market like we've got here. Let me just do that for you. So the colours aren't great. I mean, let's just change the colour, yellow, and let's make a big thick line so you can see it. Okay. So why has not changed the colour? So here we've gone down, and then it's back. Anyway, you can see. So this green dotted line point, you can see that this is bouncing between this channel, and it's finally broken out of it here when it cleared it. So if you're going to trade this sort of action, and you see the moving averages don't really help, because there's lots of false signals. You really want to be looking at something like, if I insert some of the oscillators, it's RSI and the stochastics indicators would help you. So relative strength you already got on there. So if you put a stochastic indicator on there, it's on 3 here. You can see this might help you a wee bit more. So here we're at the bottom. Tell you there. So there we've had this big move down, and it's suggesting more weakness, but it didn't happen, did it? So we got a movement. So where we're going up, well, there, that's suggesting that's going up and off. It did go up there, and it's not gone down. So again, you see they're not perfect. So there we're crossing, we're going up. Yes, it's run up. It's gone. It's trended nice space between the two stochastics lines. Then we got a bit overbought here according to the stochastic here. Then it's short here because it's crossed again. So we're down. But that was a floor. Now we turned around. That's going long, and it sort of worked. And so it's an oscillator. When we got a sideways market, it's all about oscillators. Okay. Thank you for the webinar. I'll try to have a nice day. Please, can you start this again, Segan? I don't know what you mean. Please do that again. I'm not quite sure what you're talking about, Seagum. I've run out of time. I've talked too much as usual. So thank you for your time, everybody. Any questions, please send me an email. We're here to help. And finally, let me just go through the this book list. Let me show you this slide. This is the most important one, probably. These 3 books, two here, the Reminiscence of Stock Market Operator, and The Trading in the Zone by Mark Douglas. This one's by Edwin Lever, the story of Jesse Livermore. There's as free PDFs, okay? So just simply Google them, and you'll be able to pull them down. And the Market Wizard books are great interviews with real billionaire traders. I won't forget. Dennis. Okay, so there we go. So thank you for your time. Say if you want to use the app, obviously, email me at webinars@hotforex.com. Send me a Facebook request. I'm on Facebook during the day, Stuart Hot Forex Cowell, and all our written stuff is up on our analysis page as well. So I will do that for. All right. Take care, everybody. Thanks for your time. Join